Welcome to NFM Market Perspectives.
Friday market recap, tariff uncertainty, mixed data, and our watch list. Welcome back to the channel. In the next 5 minutes, I will summarize the weekend markets using the S&P 500 heat map, explain the latest twists in President Trump's tariff policy, highlight the key economic data, run through the futures and commodities board, and then check our watch list of 1 ETF and 2 stocks. By the end, you'll have a clear picture of what mattered and what to watch next. S&P 500 weekly recap. The heat map for the S&P 500 shows a market that is choppy but still leaning green. Mega cap technology provided most of the lift. Nvidia rose about 1.5%, and Oracle gained roughly 4.5%, while Palantir surged more than 7%. Apple finished the week fractionally higher, and Tesla rallied about 5.5%. The semiconductor group was split. Texas Instruments and Qualcomm climbed, but Broadcom slid more than 4% after earnings, reminding us that AI enthusiasm has winners and laggards. Software infrastructure was quieter. Microsoft dipped about 1.25% as investors rotated into other names. Outside of tech, communication services were a mixed bag. Meta jumped about 4.5%, but Alphabet eased around 1%. Consumer stocks mirrored that pattern. Walmart and Booking Holdings advanced, while Amazon slipped slightly, and the restaurant housing names were weak. Financials were generally firm. Money center banks like JP Morgan and Wells Fargo each rose more than 2%, reflecting a flatter yield curve and steady credit data. Energy stocks were also in the green alongside a modest rebound in oil. Healthcare was the biggest drag. Eli Lilly slid more than 8% after investors questioned the sustainability of its weight loss drug growth, and most large drug makers finished lower. Overall, breadth remained narrow, indicating that investors are still selective rather than broadly risk-on. Tariffs and policy developments. Trade policy remained a central market theme. U.S. Treasury Secretary Scott Bessent said he is confident the Supreme Court will uphold President Trump's broad use of the International Emergency Economic Powers Act to impose sweeping tariffs, but he acknowledged that the administration is preparing a backup plan using older tariff statutes if the court rules against it. That comment came after a federal appeals court ruled that most of the tariffs are illegal and allowed them to stay in place only until mid-October, raising the stakes ahead of the high court decision. The administration continued to tweak the tariff regime. Bessent suggested that Section 338 of the 1930 Smoot-Hawley Tariff Act could be used to impose targeted duties of up to 50% if emergency powers are curtailed. Officials also floated the possibility of leaving the United States-Mexico-Canada agreement next year and negotiating separate deals with Ottawa and Mexico City, arguing that the needs of the two neighbors differ. At the same time, Washington unveiled a zero-tariff deal for pharmaceuticals with the UK and cut import duties on some Brazilian goods to ease food costs. China hinted that it may ease export controls on rare earth materials, and the U.S. praised Nvidia's CEO Jensen Huang after meetings about AI chip export rules, suggesting that export control policy could be fine-tuned. The overarching message is that tariffs remain the centerpiece of Trump's agenda, but the menu of tools and exemptions is becoming more nuanced as legal and economic pressures grow. Economic data. What printed data releases over the week painted a picture of a cooling but not collapsing global economy. In the United States, the Institute for Supply Management's Manufacturing Index fell to 48.2 in November, from 48.7 the previous month, marking the 9th consecutive month in contraction and highlighting how tariffs and elevated input costs are weighing on factories. Several transportation equipment firms linked layoffs directly to the tariff environment. The ISM noted that only a handful of industries, including computer and electronic products, reported growth, while the new orders component stayed below 50. Employment signals were mixed. ADP reported that U.S. private payrolls unexpectedly declined by 32,000 in November, the largest drop in more than 2.5 years, with small businesses bearing most of the losses. Economists noted that the ADP series has diverged from official payroll data and that the decline could overstate weakness, yet tariffs appear to be raising costs for small firms. Weekly jobless claims, however, fell to 191,000, the lowest level since 2022, suggesting the labor market is still resilient. Continuing claims dipped slightly to about 1.94 million, and planned layoffs declined sharply. The divergence between ADP's weakness and the claims data underscores the uncertainty around the labor market as businesses navigate tariff-driven cost pressures. Internationally, purchasing managers' indices in Europe and Asia showed mixed signals. Eurozone manufacturing stayed below the 50-point threshold that separates growth from contraction, while services remained solidly above 53. The UK composite PMI improved modestly, and China's private sector Caixin PMI slipped back below 50, reflecting ongoing caution among Chinese manufacturers. Canada's IV PMI surprised to the downside, and the Bank of Japan's household spending data showed consumers still cautious. Altogether, global growth seems to be slowing, but not collapsing, and central banks are unlikely to make dramatic moves at their December meetings. Futures and commodities across the futures board, U.S. equity indices held near their recent highs. The Dow closed near 47,854, down roughly 0.2%. The S&P 500 near 6,853, off 0.1%. And the NASDAQ 100 around 25,575, down 0.3%. While the small cap Russell 2000 outperformed with a gain of about 0.8%. Overseas, Japan's Nikkei 225 and Europe's DAX and Eurostoxx 50 posted modest gains, and the VX Volatility Index slipped below 18, indicating calmer sentiment. Energy prices edged higher. West Texas Intermediate crude closed just under $60 per barrel, and Brent around $63, each up more than 1% on the week. Natural gas jumped to about $5.07 per million British thermal units, aided by colder weather forecasts. In the metals complex, gold hovered near $4,240 per ounce, and silver pulled back modestly, while copper softened slightly amid ongoing global manufacturing weakness. Agricultural markets were mixed. Coffee and orange juice rallied, whereas cotton and sugar drifted lower. Livestock contracts firmed, with live cattle and lean hogs both up over 1%. In currencies, the dollar index ticked higher, and the euro and pound dipped slightly, reflecting expectations that U.S. interest rates will remain above European rates into 2026. Bitcoin retreated toward $92,000 after failing to hold gains earlier in the week. Bonus section, 1 ETF and 2 stocks XLK, Technology Select Sector, SIMPDR ETF. XLK spent most of the week drifting sideways around $290. After a brief pop early in the week, the price settled into a tight range near its 5-day moving average, and the Bollinger Bands contracted toward the end of the period. The MACD indicator is flat near zero, signaling a market in wait-and-see mode. Bulls want to see a decisive break above the upper band near $291 to reassert upside momentum, while a close below $289 could signal deeper consolidation. CRWD, CrowdStrike. CrowdStrike delivered earnings this week, and the stock experienced a roller coaster. Price initially spiked above $520, plunged to around $487 after the earnings release, and then quickly recovered to the low 510s. Since then, it has chopped in a narrowing band between $512 and $518. The MACD histogram turned positive after the rebound, but is now converging towards zero, suggesting waning momentum. Traders should watch the band extremes. Sustained trade above $518 could target the prior high, whereas a break below $511 might trigger a retest of the post-earnings low. CRM, Salesforce. Salesforce also reported earnings and was the star performer of our watch list. The stock exploded higher from around $234 to nearly $248 after the results. It is now consolidating near the top of its Bollinger Band, with the MACD still firmly positive but starting to roll over. A close above $248.6 would extend the breakout, while a drop below the 20-period mid-band near $247 could flag a short-term pullback. Game plan. We end the week with a market caught between improving sentiment and lingering macro risks. Stronger technology leadership, calmer volatility, and selective buying suggest investors are willing to stay constructive. However, the narrow breadth, tariff uncertainty, and mixed economic data counsel patience. Until the Supreme Court clarifies the legal standing of Trump's tariffs, headlines could whipsaw markets. Focus on quality companies with clear catalysts and strong balance sheets, and continue to manage risk. On our watch list, XLK needs a breakout, CrowdStrike is digesting its earnings move, and Salesforce is consolidating after a strong rally. Respect support levels, keep position sizes in check, and let price confirmation guide entries. That's it for this Friday's recap. Have a great weekend and see you Monday for the pre-market setup.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anna from Market Perspectives.